In the meantime, U.S. businesses in the crosshairs of the U.S.-China trade tensions. This is all happening as President Trump said earlier today that China wants to come back to the table and negotiate a deal.
China called last night our top trade people and said, let's get back to the table. So we'll be getting back to the table, and I think they want to do something. They've been hurt very badly, but they understand this is the right thing to do, and I have great respect for it. I have great respect for it. This is a very positive development for the world.
For a reaction to the president's comments, let's welcome Nick Pinchuk. He is Snap-on's chairman and CEO. The Wisconsin-based manufacturer has 2 manufacturing facilities in China. And Nick, thanks for being here today.
Sure, my pleasure.
There is some back and forth about what happened, who called who, whether there was any phone call that took place. But what we can say, and what the market's probably reacting to today, is that tensions seem to have ratcheted down from where we were on Friday at this point. Maybe the two sides sit down. You're in a little bit of a unique position. You've got manufacturing plants in China, but a lot of this kind of rolls off your shoulders. You don't care so much about some of this because you're selling the stuff where you make it.
Right. 80% of what we sell off the vans are made right here from U.S. steel, so we don't really react to that too much. But, you know, when I look at this, I kind of think about it. I'm not sure the president made a change over the weekend, even when he said in very strong language, I order the companies to look at China. Since the beginning, when tariffs were announced, I think most companies, most manufacturing companies, have been looking at ways to mitigate them in varying ways. It's not so easy, but on the other hand, people have been working on that, and I don't know how that changes things.
I think what changed, even if you weren't looking at the I hereby order you to move your manufacturing from there, what changed was there was so much kind of pressure that was coming on this, and things looked pretty bleak in terms of the two sides kind of walking away and potentially not getting together to talk next month as had been originally planned. Does it matter to you? Does it matter to the global economy if the two sides aren't talking or if they are working towards some sort of a deal?
Well, I think it matters if they're working towards it, of course. I think people, you know, I lived 11 years in Asia, and I think I've said on this show that I don't expect any movement until after the 1st of October, when the Chinese celebrate the 70th anniversary of the founding of the People's Republic. I think the local situation, that's what the South China Morning Post is saying. So I think you got to get by that to have political cover in China, to have meaningful negotiations. And then as it gets closer to the election, of course, we have more motivation here. So I think you're going to see it as it goes in that situation. And I think that's a reasonable way to look at it. I think this idea of bringing things back to the United States is another question. I mean, manufacturers would say that 500,000 jobs are still open in the United States, and we can't fill them. So when you bring back jobs, you're going to have to be able to fill them. For our factories have never had more hours, as far as I know. And I've been CEO for 12 years. And so they're pounding stuff out, so they're moving pretty well.
So, Nick,
yeah,
if tomorrow we get a major de-escalation of the trade tensions,
yes,
do you think business rethinks whether they should diversify their supply chain, or is this a permanent change now? People think that doing business in China is riskier. So regardless of what the outcome is, we will see diversification.
Well, I think that's one thing. I think this interrupted the upward trend of sourcing in China. So I think there's a reason why China is the primary source, is they have a great supply chain. Also, for our situation, you know, we have 5 factories and 1,500 people in China who are accessing that market. And the real discussion here is around the China market. Really, it's not about what's coming into the United States, in my view. It's the idea of intellectual property, you know, the stealing of the transfer of intellectual property, the forced transfer of intellectual property, and the competition with state-owned industries. And that really is the axis of conflict here. And so I think the real prize is China market. So I think people will still keep trying to invest in the China market. Also, I was there during Tiananmen, and I'll tell you what, those companies that pulled out completely during Tiananmen had trouble getting back in.
Because the Chinese wouldn't let them back in. They saw
right. No, well, not the Chinese government, the Chinese people. Chinese. One of the great books in the canon of Chinese literature is something called The Three Kingdoms. It starts with the empire long united must divide, long divided must unite. So it has ever been. And the idea of this kind of constant change is axiomatic in Chinese thinking. Every educated Chinese reads this. And the other thing is, in that book it says, and trust and loyalty must transcend that. And so Chinese people, from accountants to factory workers, look at this and think, if you abandon them completely, if you say just because of political turmoil you're going to move away, you have trouble recruiting those people in the future. So that's something to consider. So for us, we manage that fairly well. We're certainly looking at mitigating tariffs, but we have to think about the local market as well. because it's very important to us.
And how is the local market performing in your China business?
Well, I don't think, I think the local market is, they're pretty shocked, you know. I mean, China's been like this, but 2 years ago, they did 27 million vehicles. This year, it's going to be down. You talk to car dealers, they've never seen a down market. They don't know what to do about it. So there's a lot of uncertainty floating through this. So for us in China, it's a time of kind of uncertainty there because they don't know how to react to this kind of thing. They've never known how to react to a down market. In the U.S., by the way, our market's doing pretty well. U.S. is up. I was just with our franchisees over the weekend. You know, you talk about consumer spending, and these guys are calling on almost 1 million technicians. And if you were with them, you wouldn't think there's any recession.
In 2018, your 2 Chinese manufacturing facilities had net sales of about $3.7 billion. What are you going to be on track to do this year if the market has slowed?
That's our overall sales. That's our total sales.
Okay.
That's our total sales. Sorry. You know, I think this is actually our China sales are up somewhat because the China market is going like this, actually. They're up somewhat this year. Our Indian sales are up even more, which is a kind of an offset, nice offset. But the China sales, it's getting tougher to make those gains. And we're seeing the margins get pushed because you're kind of, you know, you're discounting somewhat and you're bringing in new products and you're not getting quite the premium. But still, it's moving upwards for us because we're in the auto repair sector, which tends not to be so moving. But in general, when you talk to people in China, they are more concerned than I've heard them in a long time. And I was there, like I said, 11 years. I've been in China more than 100 times.
So if you're looking at the long game, there are some people here who say China is better positioned for the long game, that they'd be more willing to tolerate more pain. Do you think that's the case, having lived there, having seen what's happening?
I think that's an oversimplification of the situation. I think if you want to understand any kind of diplomacy, whether you're talking about trade or strategy, you've got to look at the local situation. And I think right now, the Chinese are trying to manage over this celebration. They don't want to kowtow to Americans, and I think they're not going to do that under any circumstances because it tends to undermine the position of the leadership there. But after that, they tend to find a solution quietly, and I think that's what the president's going to do.
Nick, earlier today, the Chinese currency was at an 11-year low.
Yes.
EM currencies in general have been hit hard.
Yes.
How do you think about currency risk?
Currency risk is already upon us. I mean, in the last 18 months, the pound has pounded us worse than the Chinese currency.
So what are you doing about it?
Well, we're certainly trying to price. We're trying to reduce our costs in that market. I mean, that's what I've said all along on this show and others, that tariffs is just another element of turbulence. We're going to have 50% more impact from currency, unfavorable transaction associated making in the United States, selling into a place like the UK or selling to Australia. It's a headwind in terms of our business. But this is usual business. We've had years when we've had 50 cents of currency impact per share.
Just go back to what you were thinking about in terms of the Chinese wanting to come to a quiet agreement.
Yes.
I mean, maybe that's one of the biggest problems with these two sides negotiating at this point. The Chinese would maybe come to a deal that they would do quietly so they could save face. I can't think of President Trump reaching any deal and keeping quiet about it.
Yeah, I suppose you could think that, but you're going to have the real experts soon. Jeff Sonnefeld's going to be on here, and he's the guy who analyzes all the CEO motivations and their proclivities, so he's probably going to speak with more authority than I could. I'm not so sure. It certainly doesn't seem to line up that way. But if you say you're a deal maker, any CEO or any businessman will say that. You know, you rattle your saber and also you concede sometimes as well. You can't say you're a deal maker and not be doing that. I'm sure that President Trump has done some quiet concessions himself in the real estate market from time to time, and I would assume that he's capable of doing that now. And I think whatever happens now, like I said, that great American philosopher, the Green Bay quarterback, Aaron Rodgers, I think people should relax, because I'm not so sure that right now there's going to be any deal anyway, because you got to get into a later part of the year, early next year, I think, to even expect any reasonable progress.
Nick, I want to thank you for being with us. We really appreciate your perspective.